What happens if your Forex account goes negative? Hello, this is Igor from FX Igor YouTube channel. Today we'll talk about negative balance protection. So let me start from the definition. MT4 negative balance, this is for MT5 too, is negative money account that occurs at the moment when during a volatile market, funds in your Forex broker account fall below zero. So usually MT4 negative balance is temporary problem MT4 account. But let me see in practice. So on this screenshot, you see minus $5.4. So you will ask yourself, how is this possible? So usually this is happen because volatile market. So you have a stop loss, and sometimes your trade will not be closed exactly on that stop loss, because it's so volatile, and in that second there was no buyer or seller in that moment, and because of that your trade is not closed on that stop loss, on some other stop loss, and you can in just a few seconds your account can go negative. And the problem can be various. The first one, the most common, is you risk too much. You use 100% of your account. You want to earn a lot of money, and you create a stupid trade, and usually when that happens, you lose all your money. The second option is you create a lot of small trades and you don't want to close that trades without stop loss or very wide stop loss, and market is going against you every single day, against, you go to the margin, your drawdown is huge, and in one moment, just strong volatile market, your trade is not closed on that stop loss that should be, and your account goes negative. So don't worry. Why? Because 95% of all brokers around the globe, they have negative balance protection. Your current balance will be no less than your deposit amount, because MT4 accounts usually have a negative balance protection system. So if your Forex account negative, two scenarios can happen. The first, if your broker offers negative balance protection, when your account goes negative, after a few minutes, your balance will be zero. So with that happen, just close your account, wait couple minutes, sometimes couple seconds, and after that, you will see, I know sometimes maybe 1 hour, your account will be on zero again. So don't worry about that. However, if your broker does not offer negative balance protection, you need to deposit money to make the balance positive if you want to continue the trade. However, if you have a negative balance and do not deposit money, your account will be disabled. Remember this sentence. You are not obligated to continue to trade with the broker or to pay the broker if you have a negative balance. So your balance is negative, you can just close your account and you don't need to pay your broker. I know that a lot of people ask this question. No, you don't need to pay a broker because it's not your fault. If you have a deposit money in your account, you trade with that money, and if your account goes negative, okay, you will close that account, you disable that account, and this is it. So usually all brokers, all major brokers, or highly reputable brokers, they have balance protection, and they will protect your assets, and your account cannot go below the zero. So I will just show you. This is my favorite broker. You have a link just below this YouTube video. It's HFM, and you can see they offer negative balance protection. And as you can see, they say volatile after occurs in the market. HFM policy of negative balance protection means that even under highly volatile conditions, when margin call and stop outs do not function correctly, no client is responsible for paying back a negative balance. So you do not need to pay back a negative balance. This is it. So it's simple. There's no problem. And now I will show you my personal problem that I had a few years ago. So if you remember, if you're an older trader, you know about the Swiss franc jumps 30%. It was 2015, if I remember, or 2016, I don't know anymore. It was the story about the Switzerland franc soared by 30% in the value against the euro on Thursday after the Swiss National Bank abandoned the 3-year-old cap at 1.2 francs per euro. What that means is this. So please, on this chart, look this moment. Look this moment, please. So what's happened then? I will just give you one example. It was 2015, if I remember. So what's happened? Swiss bank, they wanted that euro franc ratio be above 1.2, and they said this: if price goes below 1.2, we will make intervention and we will not allow the price below 1.2. And what traders like me and other greedy traders did, we waited that price be very, very close to 1.2. When price is very close to 1.2 on euro Swiss franc chart, we made buy order. When you make a buy order in that moment, you know that price will not go below 1.2, and because of that, you make profitable trades. Sometimes 10 pips, 15 pips, 20 pips. It's a low volatile market, but we had a short trade. Why? Because price cannot go below 1.2. You wait that price is around 1.2. You put a tight stop loss, maybe 1.199 or something like that, and you wait, and after a couple hours or maybe one day, you create a 10, 15, 20 pips profit, and this is it. And every single moment you just earn money. It was beautiful. But what's happened? Swiss bank lost a lot of money because the traders trade this strategy just like I just described a few moments ago. And because of that, they just, without any news, just remove that 3-year-old cap. And then that moment, price of euro Swiss just went 30%, because Swiss franc jumps 30% and euro Swiss franc went down 30%. And this 30% down was in just few seconds. Can you believe it? In just few seconds, price went bam down. So I put stop loss. So I had stop loss, but that stop loss didn't work because on the other side, there were no buyers. So nobody wanted to buy. And because of that, my balance went negative. And I had a problem. My broker had bankruptcy, and my broker was closed, and it was a nightmare. Nightmare for me, nightmare for broker. We had a lot of problems. On the end, broker paid me everything, but it was, I think, 2 years process, because broker had a bankruptcy, and I wait money, I think, more than a year, and it was a very, very complicated situation. I don't want to talk about this, but I just want to give you example how market can be cruel, and you need to be ready about that. Of course, the best opportunity for you, the best thing for you is always risk 1% from your account. And if you have a small account, please increase deposit amount and always risk 1%, and you will not have any kind of problem. This is the end of the story. I wish you a great day, and bye bye.